Hi, this is Atmir with a weekend edition of the Bulletin Board Heroes here at Zach's Traders Cafe. It is Sunday, the 1st of October. Starting off with the FTSE 100, which had a rather strange end to the week with the strong candle on Thursday and a weak candle on Friday, Gravestone Doji, I think that's called. The Friday situation where we bull trapped through the black 200-day moving average, 76.40, and then came back with almost a flat close. Current parameters are that uptrend line there from back in August, 75.90. And then I suppose really getting an end-of-day close through the 200-day line. If we can do that, then it would be up to 77.60 and the top of the falling February trend channel from the beginning of the year. Good news, I suppose, is that the RSI is still above the neutral 50 level at 54. And on Thursday, we bounced off the 50-day line, still rising around 75.40. But overall, a bit in the middle of the range and rather volatile at that too. Going on to the DAX, and here you can see that we also had a little bit of a reverse of Thursday's buy there off that line from May. And in fact, failed at the 200-day moving average 15,600 and came back with an equally painful-looking candle. But at least while we're above Thursday's support and that May line around 15,100, we're still looking for at least a rally towards the 50-day line at 15,800. You could also argue that the rebound on Thursday was off the back of the RSI being near the oversold 30 level, and hence that gave a bit of a dead cat bounce effect. Moving to the Dow, and here the picture is that we've had really got the 200-day line there at 33,800 acting as a barrier. We've closed back at 33,500, so not looking good. Does look now as though we may not only have tested the June-July area support, that support zone around 33,500, but might need to go even lower to 32,600 and May support before the latest breakdown finishes. RSI is at 30, and that little kink there suggests that there is a new leg down. And obviously the whole pattern here since June is of a double-shouldered head and shoulders, which is obviously not a great look, and could promise us a push back down even as low as March support at some point over the course of October. But let's see how we do to start the month. On to Bitcoin, which has been showing some signs of improving, especially on the basis that we managed to end the week properly above the 50-day moving average at 26,600. Like to see a clearance of that July resistance line at 28,000, and maybe even the 200-day line as well at that area. But basically, if we can break through that July resistance line, then we could be on the way back towards the 30,000 area, which was there back at the beginning of August. So looking a little brighter there for this market above 26,000. Moving on to the stocks, and starting off with one which has been a bit of a head scratcher. It's Aterian. I think they had good news earlier in the summer, and that delivered the spike that we had to 1.3 pence. But since then, probably off the back of a very crowded trade, the shares have had to consolidate, but they're still in a rising trend channel from the turn of the year, and above 0.82, we can say that the shares could be heading as high as 1.1 pence at the top of that rising trend channel in place since the start of the year, and we could see that by the end of this month. So let's see if the charting call works there. Quite a difficult one, that one. Moving on to Sizzle, which has revitalized and revamped itself over the recent past. Current situation is encouraging on the basis that we've had consolidation above a rising 50-day line. That suggests that we should at least head to 2 3/4 pence, which is a May resistance line projection, and then hopefully by the end of the month, as high as 3.6 pence May resistance on the way down. But the key here is holding above 2 pence and that rising 50-day moving average. On to East Imperial, and here very strong end of the week as well, with the rebound above a rising 50-day moving average. That tends to be a good signal. That suggests that the 3 pence area is a done deal over the next few days, and we could head as high as 4 pence by the end of this month, while we hold above 2 pence, which is basically Friday's support area. On to Hydrogen Utopia, which had a good end of the week, closing above that resistance line there from June and the 50-day line at 5 pence, above 5 pence, and above recent September resistance around 5.3 pence. We're looking for up to 10 pence by the end of this month, which is the top of a broadening triangle from the beginning of May. That area also coincides with the 200-day moving average. Insig AR is a stock which I liked over the course of the summer, and after a little bit of a pullback from 26 pence, which you can see basically obeyed the charting trajectory. We're looking for the top of that rising trend channel from October to be hit. Just missed it. Current situation, though, is we've had a rebound, bear trap rebound from just below the 50-day line, which is rising, and the 200-day line, which is also rising. So we're looking for 26 pence again over the next week or two, and then maybe by the end of this month as high as 34 pence at that October resistance line projection. Stock which I haven't covered quite some time, but I know has one or two friends and followers, is Marechale Capital, and here you can see that we've had a rising trend channel in place since the beginning of the year, a nice breakout through the 50-day line to end the week, and filling two gaps to the downside from back in August. So above the top of that gap, 205, looking for 2.6 pence over the next week or two, and maybe by the end of this month as high as 3.8 pence. But we want to stay on the right side of that 50-day line at 1.8 pence. Pantheon is next, and here every day that goes by that we're on an upward trajectory seems to be something of a miracle. Good consolidation here with a V-shaped bull flag at and above the 200-day moving average at 29 pence. Above that, we're looking for 50 pence by the end of this month, even though I suppose the best of the gains on Friday did fizzle out. But there's an uptrend trend line there in the RSI window, which has been bounced off during the week, and that gives us decent comfort. Onto a stock which has been very interesting over the recent past, with Sir Martin Sorrell there at the helm. I suppose one message is that with the history of S4, you've got to know when to quit, and maybe just sticking with the WPP would have been enough of a legacy for the great man. But in terms of the charting, we've had a hammer candle on Thursday, and an unfilled gap to the upside off the lows on Friday. So that sort of gives us a what I call a bear trap island reversal. So a gap down at the beginning of last month and a gap higher to end it. That does suggest that we could head back to at least the floor of the gap there, around 80 pence, even if the shares then fizzle out after that. But rather painful experience there. Once you get more than a couple of gaps, unfilled gaps at the downside, it can indicate major fundamental issues as well as charting ones. Moving on to Tertiary Minerals, and here we've got a V-shaped bull flag, not quite as good as, well, so far as the Pantheon one, but it is a V-shaped bull flag either side of the 200-day moving average at 0.126, and above that 200-day line, and especially above the 50-day line, of course, which is rising. We're looking for 0.22, and gunning for that by the end of this month. On to the last two. First one is a bear favourite to attack, and here again, looks as though we've got something exciting going on here, a sort of V-shaped bull flag, mini one there, either side of the 200-day moving average, consolidation above a rising 50-day line as well, so it doesn't seem to be out of the realms of possibility that we could head to the top of that rising trend channel from March at 8.5 pence by the end of this month. Probably just need an end of day close above 6 pence to inspire a bit of confidence there. Finishing off with Zanaga, and here had to cover this situation really because there was an unfilled gap to the upside off the lows, and basically all we're missing here now is an end of day close above the 50-day line at 5.4, and above that looking for up to the top of that rising trend channel from July at 8.75 pence, maybe as soon as the end of this month. That's it from me today. More updates tomorrow.